Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Wayne Croad, who's the Managing Director of Lending Croad, new peer-to-peer lender. Welcome in, Wayne. Thanks for coming in.
Thank you for inviting me.
Now look, I guess just to give the viewers a little bit of background, you also run Finance Direct, which is a long-term finance company that's been around a long time. So I guess it'd be interesting to kick off by asking why you decided to also launch a peer-to-peer lender.
Well, it's really simple. I mean, you can't you can't stop progress, and I think we've looked at the finance market. We've looked at what's going on around the world, and we've thought this is a good model. And you've seen it yourself in your own industry. The media industry has been disrupted in a major way, and we think that will happen with the money market as well.
Okay, and you launched the site just before Christmas. How's it going thus far in terms of lending that you've facilitated? I mean, can you give us any figures and volumes, and what's the investor interest like too?
Sure, we've got off to a great start. We've originated just over $700,000 in loans. The average loan has been around $22,000. The one aspect that we've been really surprised about, we've had a huge response from retail investors. So we've had a number of retail investors come onto the platform. In fact, we've got over 60 active retail investors already. And from the point of view of volume of loans, we've received over $8 million in loan applications. So we're pleased that the actual website portal is facilitating the loans efficiently, and that's one thing we were conscious of. We're a 100% online platform for secured loans, so we wanted to make sure there's more IP centred around processes for people buying motor vehicles and using security for their loans. So we're still in launch phase and very happy with how the launch has gone.
You're doing business loans, so for SMEs, personal lending and vehicle lending. How did you sort of decide to go down that path?
Really, we looked at it, and it was just where is the need in the marketplace, and I think it's obvious that there is a need there for a 100% online solution for people that have problems. There's bureaucracy around banks and approving loans. So that SME market is low-hanging fruit. It's people sitting there frustrated, time poor, that really need a good online solution. And that's the SME market. The other market, motor vehicles, is a massive market in New Zealand and in Australia, well, worldwide. So we looked at that, and we knew we had some unique IP around secured loans. We've been under the Finance Direct banner, which is my other company. We've been facilitating secured loans for 16 years, so it just seemed obvious to take that IP and put it into the online platform.
Now, how is Lending Croad and Finance Direct going to work together, indeed, if they are?
Yeah, look, Finance Direct's registered as an institutional investor on the site. So to give you an idea, out of the $700,000 of loans that we've facilitated so far, Finance Direct's written around 300,000 of those, which we were actually thinking we'd be writing a lot more to kick things off. So we have had a huge response from those retail investors.
And Finance Direct thus far, is that your only sort of institutional investor, I guess, to date? Yeah,
at the moment you can log into the site and register as an institutional investor and a private investor, but the institutional investors at the moment tend to be relatively small company type entities. A real institutional investor will require, in the likes of your investment funds out of the UK and the US, are really going to require, to come in, dump $30 or $40 million, do a lot of due diligence, and provide a facility in that way. So the two distinct type facilities, so to speak. So you've got private investors, institutional, small to medium-sized companies and entities and partnerships and trusts that can go and invest on the platform. And then ultimately, we'll have other institutional big peer-to-peer specialist funds that will come in and assist us to fund the platform.
So you're definitely looking to work with those bigger players in time?
Absolutely. I think it's very important for two reasons. One, you can facilitate the loans faster, and that's the key for borrowers. You need to be able to complete that when they get the listing, really have it funded within 48 hours maximum. And the pleasing thing for us in being able to set up the way we have, and with the support of Finance Direct as an institutional investor, we can provide that service out the gate without having to necessarily have those lines in place.
What about banks? I mean, we've obviously seen with Harmony, Heartland Bank as a shareholder and an investor, and LendMe is talking about wanting to work with a bank as well. Is that a path that you might take at Lending Crowd as well?
Absolutely, we're definitely going to go down the path. You know, if we're going to play in the same sandpit as the bigger players, really, we can see the. You know, we've spent a minute amount of money on marketing so far to generate, just over the 700k in 1 month. So we can see that there's a huge opportunity there. To take advantage of that opportunity, we're really going to have to, bring in the bigger institutional players in partnership arrangements. But that whole side of it has become a lot easier. I mean, let's face it, peer-to-peer worldwide is very well accepted now. It's taking off around the world. It's a success story.
So are you talking to any banks at the moment about possible partnerships?
We are. Under our strategic plan, we've really had the execution of that plan has been around three things. Firstly, achieving our licence through the FMA and having Finance Direct a part of that licence process. The second part is obviously the soft launch, and we really are quite comfortable with the soft launch period over a couple of months. We want to see a couple of cycles with investors getting their money and the repayment of their interest and principal back, the bedding in our systems, and at the same time, in conjunction with that, we're talking to both institutional peer-to-peer funders as well as equity investors in the Lending Crowd platform.
And banks as well?
Yes.
Yeah.
Yep.
Can you give us any names?
I can't at the moment, really. They are initial discussions that we're having. Like I say, under the execution of our plan, we knew we could facilitate loans onto the platform. So really, we wanted to make sure that we've got a different product out there, it's secured loans. We've done that specifically because we want to drive down the cost of borrowing money for borrowers, and we want to, offer investors fair returns, but we want them also to create a quality asset at the end of a 3 or 4 year term. So as they're building a portfolio of loans, they don't get to the end of it and find 30 or 40% of it in arrears. It's a quality producing asset for them. The aspect of raising additional money is, for us, we're in the ideal position because we can fund the loans along with the retail investors. We can facilitate the market. We can make sure all the loans originate within 24 hours or 48 hours. We think we're in the prime position now to talk with those partners.
Okay, and look, I mean, obviously, in terms of the nuts and bolts of it, you've got risk grades for your borrowers. Can you tell us a little bit about how you determine those?
Yep, sure. We've got 4 risk grades for personal borrowers, so a borrower and their spouse, and then we've got the SME market that we're targeting. So we've got the business, the partnership, the sole trader, the limited company, and the guarantor of the owner and or their spouse, partner. So there's 4 risk grades in each category. For the personal, it goes from the interest rates start from 7.9%, and they go through to a maximum of 19.75%.
These are the borrower's rates. Yeah.
These are the borrower rates. For business loans, there's another 4 categories, and the interest rates start from 8.95% and go through to about 19.7%. Now, how they fit into each category really depends on the profile of the borrower. To give you an example of the 700,000 loans that we've facilitated so far, 70% of those we have property and a vehicle as security. So we've got very good security, and we've facilitated those interest rates at between 8 to 11%, most of those loans. A lot of it depends what comes in. When we have a quoting system where people come in, we don't ambush them with regards to rates. They can go and they can give us some information without telling us who they are, giving us email addresses, for example. They can just go through and they can look at it and say, hey, that's a competitive deal. This is an easy offering. It's an easy process, and they can proceed. So really our objective is to, keep the cost of the borrowing down for both personal and business investors by having a simple online quoting system.
Okay.
Yep.
And what about for, I guess, the lenders, investors? What interest rates can they expect? And can you tell us a little bit about your fees as well?
Yeah, sure. For the borrower side, we basically the platform fee starts at $250 and goes right through to $1,450, and it's completely centres around the amount financed. So up to $20,000, the platform fee is $250, and that includes registration costs of any security and the discharge of any security. So very competitive. When you get into the loans that are over $100K, because our loans go from $2,000 through to $200,000, which is quite unlike any other platform out there. You get into mortgage type, we're taking a second mortgage facility, or sometimes a caveat, or multiple properties. So those incur more cost, and therefore the platform fee is higher. Okay.
And in terms of the investor rates, they pay, is it 10% of the interest that they earn?
So for a start,
the fees for them.
Exactly. We take 10% of the interest, so we only earn off the investor's earnings. We're not touching their principal. At the end of the day, the inherent nature of consumer loans, small to medium-sized business loans, is they churn often. People refinance, they do other things, they top up. So we saw it as very important that we only took a percentage of the investor's earnings. The nature of it is they should keep the money reinvested as often as they can. So yes, we take the 10% of the interest that they earn. Yep.
Now, the Commerce Commission is looking at the peer-to-peer sector in terms of whether the fees are covered by the Credit Contracts and Consumer Finance Act, or the CCCFA. Obviously, as a new sector, I guess they're doing a bit of work there. What are your views on that? And I'm assuming, given that you've just launched, knowing this, that you're pretty comfortable that your fees obviously do fit in with anything the Commerce Commission is going to determine.
Yeah, we're very comfortable with that. We're obviously very aware of the CCCFA and the regulations around fees. So we're comfortable that our fees fit into that structure.
Okay. And look, I mean, in the first sort of 2 years, I mean, how much lending do you hope you facilitate in terms of volumes? What are your goals?
Yeah, well, look, the execution of our plan is budgets on achieving $50 million amount financed in the first 12 months. So, we think that's a reasonably conservative number, especially in the market we're in. We're in a wider market. We're $2,000 through to $200,000 loans. It's secured loans. There's a bigger market there ultimately than the unsecured market. But we really, from our point of view, we really want to create a quality asset base, and that's one of the reasons we're doing secured loans. We know from experience that investors have a very low appetite for the loss of their capital and risk, especially retail investors. So we want to build that trust, and really, the finance market is sort of like until the tide goes out, you don't know who's swimming naked. So from our point of view, we want to make sure when the book matures or you get another downturn in the market, that it's a platform that's providing consistent returns, but ultimately that investors who have invested in other people's loans are looking at them and saying, look, I've got a quality asset base here. I haven't got 30% of my loan notes in arrears. So that's our objective. So if we have to give up a little bit of growth for that, so be it.
And at that sort of, if you get to that 50 million level, I mean, is Lending Crowd a profitable business at that point?
Absolutely. Yeah, the way we've structured it, at the moment we have 5 full-time staff, and we hot desk some of the finance direct staff, so we can utilise some of the existing infrastructure. Obviously, we have a lot of IP around risk mitigation already baked into the platform, but we've done this in a very efficient way.
And I know that certainly sort of Squirrel and Harmony have talked about launching secondary markets, I guess, a little bit down the line. Is that something you're also looking at?
Not at this stage, no. We're not looking at that. We want to focus on the core business.
And I mean, obviously, we've got 4 licensed peer-to-peer lenders now in New Zealand. We'll probably get more at some point. Do you feel there's scope for all of you? I mean, you're all a bit different, and further ones to come along, because it's obviously we're a relatively small country.
Absolutely, we are a small country, but we're very entrepreneurial in our approach, and it's really pleasing to see that the four parties that are out there are all different, and are offering investors a different opportunity. I mean, this is a brilliant opportunity for investors. They've got the opportunity to be involved in an asset class that's normally been reserved for the banks. Investing in SME secured loans. We know, just look at the Auckland housing market. Kiwis invest in property. Well, maybe it's time they started to diversify their investments.
Fair enough. And you've got ambitions to take the business to Australia as well. Can you tell us a little bit about sort of when and why you might do that?
Yeah, sure. Well, obviously it's a bigger market. The consumer debt market over there is humongous. It's about 90 billion. But then in the market we're playing in, which has expanded again, 2,000 to 200, and secured loans, it is a massive market. So New Zealand's actually a good testing ground for things like what we've produced. The other thing we've done is quite unique. If you look around the world and look for 100% end-to-end online platforms for secured lending, you won't find any or many. And the reason is they're very complicated. It would have been a lot easier for us to develop an unsecured platform, but we've gone down the path of a secured platform because we think it does have some worldwide appeal, and we would love to take the platform into Australia. As far as initiating that, we want to bed down our systems. We want to stick to our plan. Everything has worked along quite smoothly so far. We want to facilitate some more loans. We want to grow steadily. We want to introduce some partners into the business, the right partners into the business, and then we will be looking to Australia.
Okay, well look, thanks a lot for that, Wayne. That's Wayne Croad, who's Managing Director of Lending Croad, and I'm Gareth Vaughan at interest.co.nz.